right, so we're gonna start in a few moments. We're gonna talk about daily setups, daily chart setups. All right, so I had a few questions. People been asking me what kind of daily setups worth trading and aligning them for potential day trades, potential scalps, and swing trades, right? Even investments. So there are A plus setups, B setups, C setups, um, and we're going to talk about all of them. The first thing I want to cover is stage analysis, cycles, right? Let me bring a white sheet for you, and I'll draw it for you guys. Let me bring my pen. So let's talk about stage analysis first. So there are four stages. There are four stages in the market. This is stage one, accumulation, right? Accumulation. This is stage two, starts from here. Let me do better job. Here's stage one. Then you got a stage two, right? And then you got stage three. And then you got stage four. And then again, going into stage one, this plus minus, right? So it's very important to understand where is this stock, where any stock located, where's the price located based on stage analysis. This is stage one, stage two, stage three, stage four, because it's going to behave differently, right? The stage one, accumulation. Stage two, ramp up. Not the best drawing, but got my point. Stage three, distribution. And then, of course, we're getting back to this stage. Stage four, ramp down, ramp down. There are different names for the stages as well, but stage one again starts here, right? This cycle can be for years. The cycle can be months. Depends. So one of the best areas to buy stock for day trading, investments, and swing trading, it's right here in this area. Let me do a better drawing for you. So we got a stage two breakout, and then you got stage two pullback. It's considered to be one of the best areas to buy a stock. So during stage one, usually companies, not companies, institutions, they do their due diligence. It's usually called DD, right? If it's IPO, it's called IPD, I think, initial public due diligence. When institutional investors, they actually look at stocks and trying to understand what's going on with their financials, and they start slowly build their position. Trading in this phase is possible. It is possible, but it could be very difficult. because stock like considered to be in a range, and trading inside the range requires certain understanding. First of all, the risk reward here is less than it's in stage 2. Same applies to stage 3. The risk reward usually less. The trade could happen really quick because of impulses, right? We are gonna have shorts coming in aggressively, and we're gonna have selling, and we're gonna have bounces of support. These bounces could be aggressive, but sometimes they could take quite some time to consolidate. So usually during the stage 1, when stocks trade in this stage, you might have to wait for your target long amount of times. Sometimes it could be weeks and even months until you hit your target. And target could be smaller, about 2 to 3 hours in this stage. Oops. 2 to 3 hour target approximately in this stage, because you got to be buying ideally bottom of the range, selling high of the range, and waiting for last point of support. This is called LPS, last point of support, and then trying to go for the breakout. And of course, this is the sweetest part when it's transitioning between stage 1 and stage 2. Gotta be here confirmed by big volume, right? Big volume spikes on a breakout. That's your confirmation for participation from the market, right? From institutions and day traders, everybody getting involved in this play. Then you got initial automatic rally. It's kind of like a mania, right? You know, when people getting long here aggressively, and then you got a logical pullback when people are going to take a little bit of profit. Ideally, that pullback got to be on a little bit volume, and then again we continue on a higher volume. This is one of the best setups to buy in a market. So once stock enters stage 2. So where else you can find potential areas to participate in the market? I just get stopped out on something. So let's look at this. So for example, we had this run up, not the best drawing, but let me do it for you. Let me do it for you. Better drawing here. So let's see, let's say stock made a run and then kind of consolidates here, right? So it's builds another stair step, right? Stair step. What people usually call this stage 2 continuation, right? And that is also a very good area to get involved once stock is getting into this breakout of this consolidation area. And I'll show you a bunch of examples of this. Sometimes stocks can build multiple stages like that, another stage 2, right? But more steps start getting along the way, more extended it gets, right? During the stage 3, usually it's the same mythology like here. The movement's gonna be slightly different because you're gonna have people taking profit aggressively. You're gonna have shorts coming in, slightly different groups of people playing, right? And you're gonna have a lot of fake breakouts in this stage. Kind of look like we're getting ready for breakout higher, and then eventually there will be less participation from investors and more of a shorts coming on a higher levels. And then during the stage 4, it's similar what stage 2 does, very similar. The movements here could be faster because of simple fear and greed. So, you know, all market is all about the fear, greed, right? Fear and greed. Fear usually the strongest than greed, right? When we're fearful, we usually tend to panic a little bit, right? So that's why you see movements during the stage 4 sell-off, ramp down, usually aggressive and fast, and bounces here could be sharp. Those are called automatic rallies, and very often stock can build some bear flags, right? And then eventually continue move down. So you can play long setups here as well. You gotta be participating on those selling climaxes, right? Selling climax and automatic rally, and then probably playing double bottoms here of this. But keep in mind, this setup and when it's here and during the stage 2 is different. So it could be more volatile and it could be more risky because stock in a downtrending phase. And of course, eventually you're gonna have a big selling climax here when the stock finally sells on a massive volume, right? On a massive volume, stock from falling down, coming usually to some sort of a level from the left, and that's when another cycle setups for continuation. So now we can talk about specific setups on actual examples. Let me bring to you. Bring to you this, and I'll show you exact examples. All right, so for example, let's talk about NVAX, right? So NVAX in consolidation right now. So NVAX building this stage 2, not the cleanest price action, but it's understandable, right? You have a high here, you have a low, you have a secondary test right here, double bottom. You have an automatic rally, right? This is automatic rally after aggressive sell, automatic rally. Then you get a consolidation, breakout, pullback. Then this area considered to be this technically a breakout of the stage 2, not the cleanest again. I'll show you some clean breakouts, but it's there. Sometimes biotech could be very volatile, right? Healthcare, biotech. Then stock builds here, last point of support. So this is last point of support. You can type it here, LPS. That's where you got to be watching this stock with potential move higher. And as you can see, we took this trade a few days ago when it went back above this important pivot point to 30s and close above 20 and 10 AMA. So you got to build a case here, right? You got to be like a detective trying to analyze, be patient, and here's what happened today. Took a massive profit on this. I think I just got stepped out on NVAX. I believe that was I got stepped out on NVAX. It's selling off a little bit. Great, no problems. Locking about like $1,000 profit. So let's look at some other examples. Palantir. Here is another one. Here's selling climax, automatic rally, secondary test, then the price drops lower on a spring candle. This is a little bit aggressive, but could be played in stage 1. As you can see, end up being in 1, 2, 3, 4, 5, 6, 7 week hold. Very nice potential risk to reward play, $20 towards 27.5. Risking possibly about $2 or something. Depends where you enter here. Is a breakout here or right there. So and then you got SOS, sign of strength here coming in. As you can see, the volume coming in after earnings and the secondary test. Another sign of strength after earnings, and now we build LPS, another support here. The whole entire month we were building this last point of support. We took a position here of the lows, sold some, had a big position actually, about 1,000 shares here, sold some, holding a small piece. We have an issue here right now. Price can break the value for the month, which is totally fine. Sometimes it takes time for them, right, to build this and consolidate. Keep in mind where's the market located right now. Overall market is overbought, running far away. So let's look at some other examples. Coinbase. I want to show you this one. Unity has pretty good chart. All right, so Unity also had a selling climax right here with a huge volume, immediate bounce, automatic rally, then another selling climax, right, with the spring candle. As you can see, this is a very nice spring candle on a weekly. And after that, we had a nice push higher, sign of strength, retest of this prior level, test again, last point of support build up. That's where you can actually get long on a position. As you can see, earnings came out there. It's a little risky because you get involved in before earnings. I usually don't do this, but you could play breakout for this area. And that's where I say that's where the best area to enter. It's right here on a breakout. Pure breakout. And then you got a 2 days run. Keep in mind, sometimes they do only 2-3 day runs because the price is extended, right? From 111 to 150. That's a pretty good price movement. So you got to be taking some profits on the way, and then you got to pull back. And that's what I call stage 2 pullback, and it's still doing it. Stair stepper and stage 2 pullback. This chart looking really good. We might do another leg down, maybe even gonna break this pattern and test lower levels again because of the market. Where is the market located right now? Everybody wants to break this, the chart. Everybody wants to see the price go higher and the chart resolve itself to 150 breakout, which is gonna be like stage 2 continuation, right? But on a small frame, because this is daily chart. So for this stages, as you can see, this stage we had it here. It took them quite some time, right, to resolve for the breakout here. You can see from March all the way to August. So that's multiple months, and you got to be patient and wait for these stocks. Sometimes, like fresh IPOs, Docken, as you can see, had initial IPO base breakout. It took it like 3 months or something, and then eventually did a retest, which also gave you the same type of setup, the stage 2 breakout here, micro pullback, and then nice run and retest, and then you can play again and again the stock. And then it started to build a higher phase here, stage 2 continuation. You got a nice breakout here a few days ago, and then looking really strong on a high. Here's another one, Docken, D-O-C-N, I believe. Oh no, what's the other one? Docs, I think it's Docs. That one? Yeah, so initial rally on IPO and then retest, pullback. Pullback is really shallow. I mean, not super shallow, but stair stepper down on a low volume, that's what I meant. And then earnings came out. You got to be involved on a breakout or more like aggressive, right? When the earnings came out, candle over candle the prior day, just get involved with gap and go here. And that's your kind of first entry, then a breakout of initial IPO high. And then you get a nice runner here for 2 days, as you can see. You got to also look at this, how much it moved in terms of percentages from 50 bucks. From 50 bucks to this 84. That's about 57% move. Well, think this way: if the stock moves having such aggressive move in a short period of time, would people take some profits, or do you want to take some profits? I would definitely take some profits off the table when stocks move so aggressively. Like NVAX is a good example when you have to take profits. I understand we all want to see this breakout 263. I want it, but the move is here for 2-3 days, and the way stock is moving, the behavior, it's very important to understand that it actually can back down and retest all these levels again and take more time to build. So if the stock gives you an opportunity 10, 20, 30, 50% in a matter of days, you have to take profits, and more profits than you think, unless you plan as an investment, right? So here's another good example on Goldman Sachs financials, right? You get a selling climax here with a nice volume, then automatic rally after that, then secondary test, last point of support build up here. There was a rumor, not like rumor, macro factor, right? We played this macro factor, not only the stage kind of micro stage 2 breakout right here, but big of a stage right there, breakout. So we took a long position on this day, gap and go for anticipating a breakout. Why? Because of the potential interest rate hike, and banks gonna be profiting from that. And then as you can see, it solved in 1, 2, 3, 4 5-day run, then pullback. That's your pullback stage 2. Also could play of this $400, and as you can see, retest again, and it's still holding this level, gives you some strength. Here's another example, Nucor. The idea was here totally different, right? But it's all the same. The mechanics of the prices are the same, guys. This stuff works with pretty much any stock. It doesn't matter what industry, whatever it is. The price action tells you the story. So you get, let me actually clear this for you, and I can draw it for you. Really nice analysis right away here. So we have a high here on the Y range bar, right? Then price pulls back right here. On this day, we have in the low, then bouncing, testing, then breaking down on a spring candle. So from here, this is our support zone. We're bouncing on the spring candle, aggressive. The earnings come, run, price clearing 50 EMA, and then 1020. This is very bullish. This is where you can possibly initiate your first long setup for the breakout of range, and then you get last point of support, consolidation. So the idea here is infrastructure bill that was passed by President Biden. So Nucor is a steel company. They will profit in this infrastructure bill, right? As you can see, it's a strong name. And I see this another thing. People saying like, man, this thing is already run a lot and it's coming and testing this high. It's a big run. I don't know. It's maybe it can't break. This is all-time high. This is strong stock, has a lot of relative strength. This has higher chance of working nicer than playing something like Baba that has a lot of negative news, that is selling and in a downtrend. Catching something here, Baba, might take a lot of time. Like I said, it's just the beginning of stage 1. So back to Nucor. Right here is on Nucor. So you got a stage 2 breakout right here. Then you got a run for multiple days. You got a pullback. Today is another pullback of the monthly value. You could technically put a long position today, stop low of the day, and see if it's gonna hold. What else is building? So building a pattern here, building a little bit of flag here, right? So the price building a flag might take more time to kind of consolidate here, and moving averages come closer. I do like the fact that it's bouncing of 20 EMA, kind of closing, trying to close at least right now 20 EMA, right? So yeah, those type of setups I think worth playing for swings, investing, and day trading. And here's, by the way, we can look at here again, Nucor, something interesting here too. So here's your initial breakout from this area, right? Multi-year stage breakout. Here's your run up. What do we have here? Stage 2. Right here, you have stage 2 right here, continuation, right? So this initial breakout right there, you get a pullback, multiple pullbacks. So you always have time to enter this. You just have to keep the stocks on watch. The best quality daily setups, you have to keep them on watch, right? The breakout, the pullback, re-entering, and then, yes, it is extended from 20 MA, but look at this. It's still going and going. Then giving you reversal candle here. This is the high, 72.50. Then what happens after reversal candle? Micro pullback, 2-3 days, and a breakout, and then run away into this earnings, and then micro distribution takes some time. You know, even like dropping lower, earnings coming, and again another stage breakout. You got to go long on a break. Stop goes below 20 EMA, and then results in a multi-day run. Again, you got to take profits right here on the high. It's extended, another pullback, holding, and then you have to trail your stop, trail to 9 and 20, trail, take some profits. So as you can see, it's actually broke below 10 MA, but hold it. So still looking strong, new high, taking some profits, and then trailing your stop, and on this day, you're gonna get stopped out. Maybe the next day, depends on what your rule. Sometimes people use about 3%. If the stock closing, you can look here, stock closing below 3% below this green line is 20 MA, you gotta sell. Well, the move was 4.5%, but the price closed 1.6, right? Maybe you want to use 10 MA in this context. As you can see, it's a 3% closure, so you're probably going to get out. So you got to use the same rules when you trade these stocks, but they can give you the most opportunities, all the stage breakouts. And I traded them as day trades because when these breakouts happen, you're going to have multiple groups of people coming in, swing traders, investors coming in, scalpers, day traders, more participation from different groups of people. It's better. That's why this can result not only in the best day trade and swing trade. All right, so that's kind of me talking about best setups on the market for long. Reversal is going to be the same for short. Just have to reverse thinking. I don't trade short setups that often anymore, mainly focusing on the long side. It's enough opportunity to play on the long side, honestly. All right, guys, if you have any questions, let me know. Other than that, take care and trade safe. See you.